Good evening, everybody, and welcome to the Sunday Market Breakdown. My name is James, for those of you joining for the first time ever. I'm a forex trader, and I do these Sunday Market Breakdowns every week on a Sunday. And basically, what I'm here to do is run through the trades that I've taken during the week, explain a little bit about my approach to the markets. But you know, this is now the 12th. The 12th episode, if you like, of the Sunday Market Breakdown. And so it's kind of just the same thing every week. But, you know, regardless, people seem to enjoy it, like the added confidence of seeing that nothing really changes. Trading is about doing the same things over and over again, if they work, of course. If you're doing the same things over and over again and you're not profitable, definitely time for a change. So I'm going to give it a little minute here and just wait for anybody that's looking to join to get involved. And whilst I'm doing that, I'll just also explain that I run a community over on LeveledFX. It's on the school platform. So if I go ahead and share my screen, you better see this here. So the approach that I'm going to be taking you through today, and all of the trades that I'll be sharing with you today, are all part of what I teach here in LeveledFX. And before you go into panic mode and think, oh no, another YouTuber selling a course, nope. Everything is absolutely for free in here. I give away the a Start Here course, which is for people that have never traded before. You don't know what a candlestick is. You don't know how to place your first trade. I got you covered. And then once you've been through that, the Leveled Masterclass is where I actually teach my approach, go into detail on, you know, what I'm looking for. But I could actually describe my approach in probably under a minute. Essentially, what I'm looking for is a strong move into a level, and then I ride the pullback from that level. That's it. I suppose I also look for price to be overextended. So we'll get more into that as I share the trades with you from the week this week. This week's been pretty subdued, but still plenty of opportunities in the market. And you'll see that from the trades that I've taken and also from the trades that the guys in the community are taking. So, you know, there's plenty of stuff going on here. The wins tab in here. So we've got like this stuff here. Euro Swiss short, win, dollar Swiss short, pound CAD short, dollar Swiss short, dollar CAD short, 40 pip win with Euro Aussie dollar. You got leveled. Yeah, there's just like a ton of stuff in here, wins all day long. And this is from people who have basically just, some of them have traded before. Some of them have never traded. I actually see better results from people that have never placed a trade before. I think that's because they join me or they find me first before finding some of the other gurus out there that share rehashed strategies but don't actually give the support and guidance that you need in trading. I'm a big fan of journaling and tracking everything that you do. I think that's the way to develop yourself as a trader. If you're just approaching trading thinking that it's a get rich quick, you've probably heard many successful traders tell you that is not the case. Trading is a long game. I myself have been trading for the last 5 years, about 3 and a bit profitably. Before that, a bit of a struggle. And so here in LeveledFX, I share my journey. Well, I share what's worked for me, really. Like a lot of gurus will show you what they got. So Lambos, watches, the luxury lifestyle. But, you know, the majority of them, and of course I don't speak for all of them, and I'm not the only person out there that's actually giving real advice. But a lot of them won't show you how they did it. And if they did show you how they did it, achieve this luxury lifestyle, the majority of people will have achieved that through the sale of courses, which is incredibly misleading and leads to the industry being a very confusing place for new and developing traders. So I seek to put a little bit of that right by what I do here in LeveledFX. And if you want to join, if you want to go check out what I do, once again, it's completely free. You can go there right now. It's school.com/leveledfx. The link is in the description below. And yeah, I'd love to have you inside. Come and check out what I'm doing. If you've been struggling with trading and you can't seem to make this stuff work for you over the long term, come and join. Like, I've got plenty of people in here I've got some people that have been trading for 20 years unprofitably, and have found this stuff and are now seeing results. So if that's you, go ahead and join. Also, if you're brand new to trading and you don't know where to look, I invite you to join, because one of the things you've got to do as a new trader is you've really got to jump in with both feet and follow somebody who you believe is going to help you get to where you want to be. And the best way to do that is to take advice from people who have already done what you want to do and then follow their guidance. If you decide that you want to do that, you need to have a word with yourself and stop looking around at that point, because hopping from strategy to strategy, thinking that the problem with your lack of profits is to do with the strategy that you're following, or maybe even like maybe it is to do with the person that you're following, that could be valid. But 9 times out of 10, the problem is you. You are the edge, not the strategy. And so my approach is to develop traders rather than help traders learn a strategy. Any strategy will work. I just believe that the simplest strategies are the ones that work best. And from the people that I know who are also successful at trading, they don't tend to overcomplicate things. They keep things incredibly simple so that they can work on themselves and actually analyze what they're doing wrong to further improve their edge. And so LeveledFX, school.com/LeveledFX. It is in the description below. So we've got some people tuning in. See, we've got Mihal, Dima, hello. We've got Yuji. Good to see you guys on the call. The regulars, that's what we like to see. That's another thing about trading, guys. Like, if you actually want to be successful, you have to commit to this stuff. You can't just dip in and dip out. If you're going to do that, you will get nowhere. You have to draw a line in the sand and say, no, I'm actually going to start committing to doing this. Every day I'm going to show up, and I guarantee you'll see results. Like, there's no other way of putting it. So today, cool, Sunday market breakdown, 15th of September. I think it's the 12th one I'm doing now, which marks 3 months of LeveledFX. Absolutely incredible, because we have people who are taking profits, following my guidance, and it is beautiful to see. So if that's you, once again, go and join leveledfx.com. Not LeveledFX. You can go to leveledfx.com, or you can just bypass that and go to school.com/leveledfx. Totally free. There's nothing to buy unless you want to. I do have a paid group, but it's literally if you want to take that next step. There's nothing extra in there, particularly some stuff to help you with edge. I talk about, I'm releasing trainings on improving your edge, helping with your mindset, and finally scaling. So I help traders get funded. I believe there's a huge lack of capital for traders out there, but we now have these internet prop firms, not prop firms in the traditional sense, but internet prop firms, which provide traders with capital if they can pass a challenge. So for $500 roughly is the price for most of them to access $100,000 in capital. You get that refunded when you pass. There's absolutely no reason why you should fail a challenge. Back in the day, there used to be time limits with them. There are no time limits on a lot of the legitimate prop firms now. And so therefore, as long as you're a patient trader, disciplined, and can follow a process, no reason for you to be failing prop firm challenges. Anybody that fails a prop firm challenge cannot trade. Simple as that. Anyway, going into it, Sunday market breakdown. I'm going to look at the trades I've taken this week. We're going to go into why I took them, as I said. And then we're going to take a look at the week ahead, check the economic calendar, and check some of the technicals. Although I tend to not do that in most of these most recent videos. Main reason being is things change throughout the week. So as they change, I update people in the community. And if you want to get those updates, go ahead and join. It's school.com/leveledfx. So this week, 1, 2, 3, 4, 5, 6 trades. And I do think that I'm a trader that doesn't take a lot of trades. My average weekly trades were around the sort of like 4 or 5 trades a week, but it has crept up recently. August was really a lot more trades than I would usually take. And I think the main reason for that is because we had different market conditions. The market conditions we saw in August were very subdued, meaning that there wasn't a lot of data events happening. We had NFP, as we always do, on the first Friday of every month, which is a big kind of volatile day. But other than that, the market's been pretty subdued, and understanding market conditions is also part of being a successful trader. Strategy alone will not weather the storm of some market conditions. And so being aware of which conditions you're trading is something that you absolutely have to be aware of as a trader. So, yeah, because there was less volume in the markets, a much less volatile conditions, it just allowed me to take a lot more intraday key levels, whereas usually I would just wait for daily levels to get hit, and that would give me my entry into a trade. So yeah, but this week has actually been quite slow. You can see the majority of my trades were actually on Wednesday. So if I just had a bad day on Wednesday, or if I decided to take the day off, I would have had 2 trades this week. And that also leads on to another point. As a trader, you don't need to be taking trades if they're not there. And so Wednesday presented a lot of opportunities. You might look at this and go, wow, you must have been feeling really impatient on Wednesday, James. But no, the actual reality is just it was a very slow day, and then everything just started hitting in the evening. So yeah, I'll get into that though. So we are 10 minutes in. I actually thought this video I'd managed to keep on time. I allow an hour for these videos, so or these live streams. Still getting used to the YouTube terminology. But yeah, I'm just going to dive right into it. And then if we've got any questions at the end, I will happily take them. Yeah, who have we got here? Oh, we got Lubomir here too. Great to see you, man. Good to have you on the live. Right, so let's get into it. So where have I got my trades? Charts, here we go. Pound Aussie. No, that's not what we're looking at. We are looking at the dollar CAD trade. Dollar CAD wasn't very nice to me last week. But again, I don't shy away from currency pairs that I have taken losses on. I don't take losses very often because of the way that I trade. I don't like losses. There's a stigma, not a stigma, a kind of a thing in the industry, in trading, where taking a loss has kind of been over glorified, I think, by many educators, saying that you've got to get used to losing. And whilst I agree with that statement, you have to take the losers on the chin. I also think that you really can avoid a lot of them by understanding how the market works. I don't trade one currency pair. I trade everything. And most people will tell you, well, you know, that means you're a master of none. Kind of, you know, the old saying, jack of all trades, master of none. And I do get why some people like to just trade one particular instrument. They tend to be technical traders only. I do class myself as a technical trader. However, you cannot ignore fundamentals because they are essentially what move the market. Nothing else really does. And if the market is moving from something that isn't a fundamental driver, then usually you're exposing yourself to the market changing direction very easily on you because there is nothing driving it, right? So anyway, enough blathering on. I'm going to get into dollar CAD. So dollar CAD, and I'll quickly explain how I trade as well in this first example. For those of you that don't know, that are joining for the first time, I know a majority of you guys on the call know exactly what's up because I've been seeing you rinse the market in the last week. And well, not just the last week either, the last few weeks. And it's amazing to see. It's one thing to take your own profits. Another thing to put something together like a community and a training and actually see people utilize it and actually get results from it. So what was I looking at here on dollar CAD? Well, when I'd identified this trade, if I just rewind the market, I was looking at this 4-hour level. So I'm on the 4-hour chart right now. I might just go ahead and put my watermark back on. I sometimes take it off, but I put it on here for the purposes of training videos so people know where I'm at. And And yeah, so 4-hour intraday key level. This is a level that price moved off of in a pretty aggressive way, as you can see here. So the actual move down from this was from, well, way up, all the way up here. But price doesn't just go in one direction and just keep going in one direction. It has little stop-offs on the way, right? And these little stop-offs are pullbacks. And when this pullback occurs, this is when I like to get into the market. And the reason I like that is because I don't need to predict which way price is going to go. Price goes whichever way it wants to go. And if it goes in a particular way, in a very strong way, like the move is what I would classify as impulsive, there's going to be profit taking occurring. Because if price moves one way for quite some time, traders are in this trade, at this example, going long. And so when a level gets hit, for example, if this was a particular level, well, the only way for traders to get out of that long position and to take their profits, to realize them, is to get into a sell. They sell out of their position to realize their profits. And there lies the trading opportunity. That is when we get in and we ride the pullback. Now, obviously, the move up is far more lucrative. There's a lot more in that. However, you as a trader need to guess which way price is going to go. And there are other strategies that I know will get you into these type of trades, but they have a much lower hit rate. And as I said at the beginning of the call, I don't particularly like taking losses. I don't deal with them all that well. And, you know, say what you like about that. Call me a little bitch. I just know how my own psychology works and my approach to trading. I'm the type of person that if I'm wrong too many times in a row, I need to take some time away. And so I think a lot of beginners start out like that. We're not used to being punched in the face after doing the work that's involved in learning to trade. So you could spend like 6 months learning a strategy and have it not work in the market. And that's normal in the maybe in the strategy that you've learned, right? It's kind of like a lot of strategies teach risk reward, meaning that if I was to get into this position here, then I would need a tight stop loss like this, and my target would be down here. So this, in this case, we've got this number here, 6. This would be a 1 to 6 risk reward, meaning that I would risk, let's say, $1,000, and I would make 6,000, which would then allow me to lose another 5 times and still be in profit. I think that is an incredibly backwards way of looking at the market and just totally unnecessary. I would rather have a lower risk reward, 1-to-1, even slightly negative, and be right 90% of the time. That's just me. And that's how my approach works. And it seems to be working for a lot of the guys who have joined Leveled FX. So yeah, that is how I trade. So back to the dollar CAD trade. And I won't go into the trading on every single, how I do trading on every single trade analysis, just because that kind of shows you in a nutshell how I'm doing this. So what I'm doing is I'm looking for a strong move in. So I can't target a level that's kind of close to where price is already, right? I need to look for something that's far enough away. So I can measure this with my tool on TradingView. So 120 pips or so into this level up here for dollar CAD. And if we play price forward, we can see we had a very strong move towards the level that I was interested in. The other thing that I'm interested in is whether or not price is overextended. And a good way to understand if price is overextended is the move that it's done in the given day. So whilst I do trade the higher time frames, I am still a day trader. I'm kind of like, my entries are from, I suppose, swing positions. However, I refine my entries to the 4-hour, the 1-hour, sometimes even the 15-minute. In fact, I have an example from this week on pound yen where I refined to the 15-minute to take advantage of a trading opportunity. And I'll show you that. But yeah, a strong move in and price overextended. So this didn't actually set up until the next day. So what I've done here is I've just put an indicator on the chart called average true range. And what average true range does, average true range, my mouth's a bit dry, hang on. All right. Average true range, ATR, we will call it, is the average range price has moved on a given instrument, currency pairs, stock, whatever, in a given day over the last 20 days, the average of that. So what it allows you to see is gives you kind of a rough idea of how far price has moved in that day and whether or not it might be overextended. So you can see that on the Friday of last week, price did actually overextend past average true range. I can zoom in if this, whoa, what did I do there? Zoomed in too much. Can zoom in and what have I done? Dollar Swiss, I've moved down. There we go. That was confusing. Yeah, so price breached average true range and then made a bit of a pullback, but this was late in the day. It was also a Friday, and so not something that I was interested in at that time. And then we did have a pullback, but then price continued to pull back. And then on this particular day, we can see that my level now aligned with average true range. So this tells me that if price was to get up here, I would be interested in taking a short from this level. If price gets there, I like to look at trading as something I don't really want to have to do in that day. Now, that would seem a little bit backwards to a lot of people new to this. You're a trader, James, so surely you're in the market looking for trades. Actually, no. I would rather not take a trade. And the reason I would rather not take a trade is because I want the most probable entrances on my trades, meaning that if price was to get all the way up here today, I would have to take it. So if price just kind of came up to a level, but it was well inside average true range, meaning that price wasn't really overextended, and we've already seen this big move up, I'm not going to look to get involved in that. But if price does get to somewhere on my chart where at the beginning of the day I'm like, there's no way we're getting up there today. No way. But if we do, then I've got to take the trade. So that being said, we had this huge move in to the level. And as you can see, I'll drop down the time frame so it's just a little bit clearer. We had the move in like this. There's a couple of lessons here. So first of all, pretty much zero drawdown. Couple of pips went against me, which is absolutely fine. And then we did actually see a pullback to around 20 pips or so. My first profit target was where price had left its footprint. So where price leaves its footprint is kind of how it gets to the level. And so as price moved up, it consolidated. And so therefore, I'm looking for the first area of potential struggle, meaning that when price comes to this area, I'm expecting it to struggle because it's going to hit this traffic zone where there's been a lot of activity previously. So price isn't just going to smash through that. Price never smashes through areas like this. It will always come in, have a lot of resistance, and then either go back up or continue down. But it never just smashes through. So what I like to do is take my first profits at that level. And sometimes I will leave a running position on the trade if we're in an area where I think, for example, if we were at the highs of dollar CAD, I may be interested in holding a running position because I might end up holding that for days on end because we've got a huge drop to continue going down. That would be something I would be doing if we were up in this region here. Because we would have had this big run up. Therefore, at some point, we're going to come back. And so as we come back, leaving like 10 or 20% of my position on, that trade in itself can actually grow to be much, much larger. And when it does, it can build bigger than the original trade that you took. And it's kind of like, I don't want to say free money because there's no free money in trading. It's a planned, it's part of a process, but that's something that you can do. Anyway, getting back to it, first area of potential struggle, and then price just made its pullback. So let's play it out. There you go. And this, there's a couple of lessons here. So let's cover those. So first of all, first area of potential struggle, look what happened. So I had mine just slightly above these wicks. Why? Because I want to ensure that I pay myself from being right about this level. The worst thing that you could do as a trader is get into the trade, be right about the direction, and then see price come all the way back against you without actually taking any profits. Now, I saw that happen. If you're a little bit afraid as a new trader and you're not good at holding your positions to your profit targets, if you look at this, we got in, I had 2 pips of drawdown, and then you can see that we actually did 17.5 pips to the lows. Now, at the time, we were approaching the end of the day, but my trade hadn't hit its first area of potential struggle yet, and so I held the position. Why? Because I track this stuff. I know that over time, if I decide to close a trade early because I'm going to bed, right, or I don't know, like because I started to feel uneasy about it, let's say, I'm not going to get out of that position for that reason, having seen the data in my tracker that price will actually come to the first area of potential struggle. If price doesn't come to the first area of potential struggle, obviously I was wrong about this level, right? Just to see a 17 pip reaction after we've had a strong move in. I'm not even going to bother recording this right from the bottom, but like over 100 pips in. So am I going to take just 10% of a pullback in this case? No. So I'm holding for the first area of potential struggle, and price did get there, and look what happened. We reversed on ourselves and went in the opposite direction. Not for long. We did come back, I think, on that. We'll see in a second. But the other lesson here that's really important is traders that move their stop loss. So let's get this on the chart just for example. I do not want to see anybody in leveled effects doing this. So let's say you've got a stop loss. Hypothetically, it's up here. This is your trade, a little over 1-to-1. So you're risking that for that. Okay. Now, price moved in my direction 17 pips. But then look what happened. Price came back to retest the entry before actually making its move. Traders that do this, I'm in 17 pips of profit. Let me just move my stop loss to break even. Now I've got a risk-free trade. You do not have a risk-free trade. What you've just done there is you've identified a trading opportunity that you could have profited from, and you've now just shot yourself in the foot because price is going to come back, retest, and then I use the train analogy. Everybody's standing on the platform. You get on the train's still waiting to leave. It does a little bit of a, the guy blows his whistle. That's this 17 pips. This is the first time I've done this train analogy, so bear with me. Making it up as I go along. So he blows his whistle, and then price comes back. And then you have to hop off the train at this point because your ticket's been invalidated. This is terrible. But anyway, you get the point. So everybody else that's got a valid ticket, because they left their stop loss up here, they stay on the train. Whereas you have to get off now and watch everybody else ride off into the sunset. Somewhere nice. Profit land, let's say. So never move your stop loss to break even. So there's a couple of lessons in that dollar CAD trade. I promise I will speed things up as we go from here, but I try and make these live streams as educational as possible, because if I'm just showing you my trades each week, I mean, that's great and everything. Like, there's a ton of profitable traders you can go and watch on YouTube waving their willies and telling you how good they are. But does that help you? Not really. That just fuels your YouTube binge watching, which is not going to help you progress as a trader. So I will just go into the details of like why I do what I do, and then I'll just run through the rest of my trades. So bear with me and my awful analogies, but hopefully the train one made sense. So that was dollar CAD. And after it hits my first area of potential struggle, it can do whatever the hell it wants. I'm not here to make huge runs, hold my profits as long as I possibly can. I'm not about that. I'd rather just get in, grab what's available from the market, and then get out and move on with my day. Like I said, I'd rather not be in the trade than be in it. Euro Swiss, this was a nice one. This was a very calm, I want to say, Wednesday morning trade. Euro Swiss long. Let's get into that one. Euro Swiss. I got a lot of stuff going on here on Euro Swiss, but you'll see why in just a second, because I wrote this thing up and then wrote it back down. What I like about Swiss pairs, what I don't like about Swiss pairs is they move quite slowly. What I like about Swiss pairs is they move quite slowly. and I'll explain. Swiss pairs are quite predictable. They tend to go level to level. And so whilst they don't move a lot in a given day, you do end up holding them for a bit longer, but they really do add up. Like this is a trade that went on to do 120 pips level to level. I mean, that's kind of like taking a trade on pound yen, you know, from a boring Swiss pair. So this can happen, and they do tend to go level to level. Like there's a level in here, as you can see there, that 4 hour level. So what I mean by level to level is this. You come in here and you go up there. I didn't take this level to level. And the reason I didn't take this level to level was because of the market conditions. I didn't like this week's market conditions from a volatility standpoint. It was a very subdued market. And so therefore I was quite quick to take my profits at the first area of potential struggle. I can't sit here in leveled effects teaching people that they should take their profits at the first area of potential struggle and not do the same thing myself as a trader. So that is why I end up doing this stuff. I know over the long run if it's better to hold a trade for a long time or if it's better to take the first area of potential struggle. Would I be more profitable if I held all of my trades level to level? Maybe. But in trading, it is not just about that. In trading, you are the edge. So you need to protect your mindset before anything else. And so if you know that you feel uneasy about holding trades for a long time and you have a high hit rate, like mine personally is over 90%, and that's no brag. That's just because, you know, if I wanted to brag, I would much rather say held this trade for 3,000 pips. Look at that, you know, but that's a brag. My hit rate is because I take the strongest levels and the most probable trades, but I'm not holding for a long time because that's not how I protect my mindset. I protect my mindset by taking partial profits, usually the majority. It's usually about 80%, unless the trade's barely gone anywhere and I feel uneasy about it for whatever reason I'm seeing in the market. And then I'll maybe take 50% and wind my stop in a bit, something like that. But most of the time it's 80 to 90% of the profits, and then I leave a runner. So in this case, I think I took around 20 pips off Euro Swiss. Yep. And then I ran it up to around 50 pips with the runner. So all in all, it was a pretty nice trade. And the reason I took this trade is because if we zoom out, price had come to a level where we hadn't been for some time. This was the beginning of August. So we'd been a month away from this particular level. When price came back down to test it, it was, again, one of those trades, zero drawdown, straight into profit. So really nice buy there. I'll come back and do the sell in a minute because it was later in the week, I think. But same thing, 4 hour level up here. As you can see, I do believe we had average true range. As you can see here, this line. So price was overextended, meaning great opportunity for me to get into the trade, which I did, took a short, and down we go. Just same old stuff over and over again. So that was Euro Swiss. Aussie Yen. This one wasn't as nice. The better trade on this was actually taken by most of the guys in the community. Me, on the other hand, I got tagged into Aussie Yen before everybody else. So I had a 4 hour level just over here. Let's see where ATR was at that time. So we got pretty far down into the range for Aussie Yen. Guys, I see your comments coming in. I just want to, let's do a quick, I'm terrible at these live streams, really. I'm all over the place, but you have to bear with me. I've got comments coming in. I'm trying to talk about stuff. I'll get the hang of it one day. Robo. Let's fucking go. I'm on 6 week streak now. Awesome, man. Like leveled effects, trade the levels. That's how we do it. Tima says, this one's a good one. Entering a trade is something I don't really want to have to do. Can you repeat that one again? Interesting mindset perspective. I haven't heard it before. Yeah, there's probably a lot of things you'll hear from me that you haven't heard before. Yeah. So just to recap on this one then, the reason it's not that I don't want to trade. Of course I want to trade. Like that's how I make my income. But I think it's a good a flip for new traders to think about trading in reverse, because most new traders believe that trading is about taking trades, right? So like real life, you go to work. Let's say real life is 9 to 5. And in real life, what happens is, I'll come off the charts here. Yeah, real life, what tends to happen in real life is you go and work, and the harder you work, usually the more rewarded you get. You get that raise, promotion, whatever it may be. And so when people come into trading, they come into it, you know, quite understandably with the same approach. Like the more I trade, the more money I'll make. And it's just completely the opposite in trading. The less you do, as in the less trades you take, at least what I found, is what amounts to more profit. The less time I spend on the charts, the more money I make. And this I say with a caveat. When you're new, you should be journaling and tracking and reviewing a lot. So that is time on the charts. But people confuse time on the charts with taking trades. Nobody thinks time on the charts means analyzing and reviewing what you've currently been doing to try and improve your edge as a trader. And that's boring, right? Compared to taking a trade. Taking a trade is exhilarating for new traders. It's exciting. You get in, you see the numbers on the screen, they're going up, they're going down, they're going up a bit. And so that's why I say that enter a trade is something I don't really want to have to do. It's not that I don't want to trade. It's just that I think new traders should really try and approach trading from the perspective of how can I take less trades this week, but better quality trades. And so that's why I say what I say. Hopefully that makes sense. Yeah. So let me know if that answers your question. Where'd I get to? Aussie yen. Okay. So what is that drawing behind you? Can you bring it closer? That's my the daddy drawing. There you go. That's a piece of artwork from my eldest daughter. So we sit that one there, and she's very proud that it's in every video that I do. So that's why it's there. But yeah, going back to the Aussie yen trade, the one that I want to highlight is dollar yen, because this was the same trade, happened at the same time, and it was a lot better. So with dollar yen, we had a weekly level. It was this level here, and if I zoom out a little bit here, you can see that this level, nice strong move off of it. Yen pairs tend to move very nicely. And so when we came down here, I know that I think several people in the community took this one. Went on to do 210 pips. First area of potential struggle on that. If I drop down the time zones, 1 hour 15. Let's see where. So I'm pretty sure we're looking at either this wick or this wick. I think this is the wick that people targeted. Yeah. So Yuji, you're on the call. I know you took this one. It was 49 pips, I think you took off that. So yeah, nice trade. Yeah, I know you took the dollar yen. I took Aussie yen. It was okay, but I had a lot more drawdown than you, unfortunately. But that's just how it is. That's how it goes sometimes. So a bit of drawdown on this one, 46 pips, and then I ended up only taking around 35 pips on this one. So again, why did I take 35 pips? Because that's where price was going to struggle, right? So if price is going to struggle because of these wicks here within traffic, price is going to have a bit of a problem there. Then that's why I end up taking that profits off the table. And that's why I advise everybody should do that, because it works wonders for your psychology. It allows you to, be out of the trade. It allows you to follow a process, and it allows you to free up your mind for other opportunities that may come at you that week. So yeah, that was Aussie yen. So that was, both Euro Swiss and Aussie yen were in the morning. Pound yen long was in the evening, and pound dollar long was also in the evening. Pound dollar, looking forward to getting to that one, because that one was cool. Let's look at the pound yen. So with pound yen, back over yonder, I don't believe is that the level I took? It is the level I took, yeah. So This was on the Wednesday. We had this strong move in. Yeah, strong move down. After we'd already had a trading opportunity. I think it was either the day before or in the morning. Yeah, I think it was in the morning because it aligned with dollar yen and Aussie yen. So that we had the move down and then a bit of a pullback, which was the dollar yen trade that I just showed. I was in the Aussie yen one, stupidly, not in the best one, but I always joke and say to people in the community, the trade is, it was actually the driver for that trade was actually the Japanese stock market. And I'll say, do I want to say a couple of words on that? I will. So quite often when the Japanese stock market hits a level and starts to pull back, when it pulls back, we gain yen strength. Why do we gain yen strength? Well, because the same way the US 500, the S&P 500 works with the dollar, the Japanese stock market works with the yen. So if the Japanese stock market, if everybody's selling their stocks, what are they getting in return? They're getting Japanese yen. So that strengthens the yen, and so you get a direct correlation with the Japanese stock market and all yen pairs. And so the dollar yen move was at the time of the Japanese stock market hitting a level, and so that's why the move was a yen strengthening move rather than than just specific to that currency pair. So you could have taken the same move on dollar yen, Aussie yen, pound yen, euro yen, Canadian yen, whatever you want. It just so happened that the best opportunity was dollar yen. I just got tagged into Aussie yen before that happened. I had a pending order, so that's why I was in that. And I didn't want to double my risk by taking dollar yen as well, because it's the same trade, right? And so that's why I always joke with the guys in the community and say, just ask me like which one I took. If you take the other one, it will probably be the one that does better. But the move is the same and profit's profit. So yeah, just a quick one on that. So pound yen, back to that. This was actually refined to the 15-minute. And let's go to the hourly, because I remember this being in the evening. Let's see. No, that's a morning trade. But I definitely took this at 183.82. So it's 183.82. 183. Yeah, it was down here. That was the other trade, 183.82. Let me show you this. So, and this was a mega move that I did not capitalize properly. So I took my profits, I believe, here. Is that right? Yeah. But the move was mega. Wrong button. Yeah, so as you can see, I'm using average true range. Price tapped into average true range. And this was also a Japanese stock market move. All yen pairs were doing this same thing. So to find the level on this, we have to go back over to yonder. And this was a level where price had a big move off it. So as you refine this to the 15-minute to see what was going on at that time, and there's always data within the candles. So price had tried to move off of this low here, and it made a pullback, but it really rocketed off of this level here, the 183.8. And so that was my reasoning for getting into the pound yen trade. And I took my 60 pips on it, but it actually went on to do like 289 pips. Usually I wouldn't mind, but it went on to do 200 odd pips like within the next few hours. So whilst I took my 60, it went on to do over 100 pips. About 200 pips by the end of the day. So I was a little bit annoyed about that one. But like I said, profit's profit. Following the process, that's what you need to do. And by following the process, you will consistently make profits from the markets. So that was the pound yen trade. Pound dollar, this was around the same time. So nice that we both had like a pound. Pound was on the back foot. It was selling off, which is why I chose pound yen, not any of the other yen pairs like dollar yen or New Zealand yen or Aussie yen. So pound long from 101.301, 5, if you want to be specific. I'll show you that one. And at the time of this, we had, is that right? Yeah. So as price was moving down, in the paid group of Leveled FX, so this one here, We've got a group of really good guys in here now who are all leveling up their trading, pun intended. And we have a daily call on when is it? Yeah, Wednesday, Monday, Wednesday, Friday. We have a daily analysis call where I hop on and help people out with what they're doing that week with the trading. And I was hoping we'd get this set up whilst on the call, but price was moving down like this around the 4 p.m. where we have it, my time. So this is usually around the New York Open. So pound was selling off pretty heavily. And I said to the guys in the community, hey, look, like pound dollar looks pretty good from this level. What do you think? And people were like, yep, good. I was looking for the setup. And I just gave an example of like some of the checks that I do before entering a trade. Because part of how I approach trading is I identify the levels that I want to take in the morning, right? So I separate my planning from my execution. Oh, sorry, smashed my mic. And the reason you want to separate your trade planning from your trade execution is quite simply because when price is moving in a pretty aggressive way into your level, the last thing you want to do is start second guessing yourself and wondering whether or not you should get into this trade, right? What you want to do is remember that you just spent an hour, maybe even 2 hours in the morning going through every pair, looking at where the market is positioned and really knowing where you'd be looking to do business from today, right? Which level is going to be the business level if price gets there. So when price actually gets there, execution is completely separate to planning. You just execute. But before you do, you just run a couple of checks across the market. One of the things I like to do is look at the dollar index. What is that telling us about the dollar's strength in the market? The dollar is the daddy, always in the market, right? So I always look to it just to see where we're positioned. Like, is the dollar coming up to a level? Why would I want it to come up to a level with the pound dollar? Because obviously we're seeing dollar strength come through, which is why the pound is weakening against the dollar. So if the dollar index comes up to a level at the same time as pound dollar coming down to a level, that just adds another confluence for me to take this trade. And I will often not execute a trade because I don't understand the market driver. But if I understand the market driver, I will take the trade. And this is what helps me improve my edge, right? You can still take every level that's a strong move in, overextended, and be profitable from doing that. It's just if you want to further develop your edge, you can start adding in these other things like, do I have that correlation going on? And so in this case, that was true. But the call ended. I only do them for an hour. And so we got this trade set up around 5 p.m. So it was just after the call. And as price moved in, just textbook trade. Strong level from over here. So I'm on the 1 hour chart now, but if I go to the 4 hour, you see we got a nice move off this level previously. And we got a nice move off it as well here. And if I go back down to the 15-minute chart, just to track how price moved back into the first area of potential struggle. Why was this my first area of potential struggle? Because that's where we had the wicks. It's where we had the last interaction. Price is going to struggle somewhere around here. Might it get up here? Yes, it might. Did it? Yes, it did. But it got up there much later. I wanted to cash my profits at the first area of potential struggle. I didn't want to hang about and wait to see what price was going to do. So it was around 30 pips on this one. With spread, and I will add with spread and the fact that I always enter my trades a couple of pips ahead just to not miss trades because of the spread, especially when some of my trades have zero drawdown. I don't want to miss the opportunity just because of the spread. So I always go a couple of pips just ahead, sometimes a little bit more on more of the exotic pairs like the yen pairs, maybe like pound Aussie, euro Aussie, New Zealand, stuff like that. What was really cool about this trade is that I called this one, well, I didn't call it. I obviously talked about it a bit on the call. But then obviously other people had already been looking at it as well. So I posted, the thing we talked about on the call. Guess what? Worked out. Hope you guys saw it too. And then, not really to my surprise, but I was just really happy to see that, Michael was in on it. And then Zach also posted his screenshot. It took exactly the same trade. I had a proud dad moment. George. So that's the other thing. Like the community is diverse. So we've got Mike, who's over in the US. We've got Zach, who's in London. George is in Malaysia. Yuji's in Lithuania. So like, it's just awesome to see this. So that's why I really, really like the pound dollar trade, is that, I'm just seeing guys spotting these opportunities and then taking full advantage of them. And not only that, I'm also seeing people practice patience. So, like I said, I'd rather not be in the trade than in the trade. And that's because I want to wait for the best opportunities. You can have 2, 3 really good trades during the week, and then you could have 6 absolute shitters. And why do you need to take those? Like, that is the difference between someone being profitable and not. And so no trade is also a trade. So again, that's kind of why I'm on the, not the anti-trading boat, but, I do think that it's better to take less trades. So that's pound dollar. Then we've got Euro Swiss. You've already seen this one. You saw the long that I took earlier in the week, and then I also took the short later in the week. So same thing, 4-hour level, strong move in, price was on ATR, we take it short. That's it. Simple stuff, guys. Simple stuff. Same thing, week in, week out. And that's it. If you can follow rules and you can, well, put it this way. If you're somebody that's been trading other ways, other strategies, whatever, it's difficult to unlearn things in trading. And that's why I say that I see the fastest results from, in the community I'm talking about, from people who have never traded before. And I think the reason that that is so prominent is because they don't have the bad habits. And so they just take what I say as it is. It's like, oh, James said this, so that's how it is, Whereas if you've someone that's looked at other trading strategies, some of these 3-letter acronyms, the ones I mean, which I have nothing against at all. But I do have the opinion that some of them are really quite complex, and they're very technical as well, technical based. They don't really they're not very inclusive of how the whole market works as one, right? Like I mentioned, the yen trades, I'll answer that in a minute. The yen trades were all just like one trade. It's just pick one and go with that. Don't take all of them. Like, it's the same trade. You just be tripling, quadrupling your risk. So, yeah. Where was I going with that? Trading, beginners, and yeah, I just see the best results from people that don't have all of this clutter in their head about things they've picked up from this strategy, from that strategy. And I'm a big believer in keeping things incredibly simple. Like, when I show people how I trade, it's almost like, well, that's like, it's almost stupid, and yes, it is. But you know what is more stupid? Some of the things I see people doing in the markets. They say that I'm going to do this today, and then they don't do that today. They do something completely different. And that is a problem in itself that needs to be solved. And so when I say that, leveled FX is for developing traders, like, that's what it's for. I don't believe that trading should be mechanical. I would love it to be. I'm a binary kind of person. I'm very black and white, but I just know that the markets are not. I know because I lost so much money learning how to do this. And so, I don't need to come at it and try and understand absolutely everything. If I don't understand a move in the market, guess what I do? Nothing. And then I come back when it's doing something that I do understand. And guess what? That keeps me out of shitty trades. That's it. So there's a lot to be said about that. Sukrimba221, I love these YouTube names, says, I saw on the pound dollar 2 short entries on your chart. Did you take those? If yes or no, can you tell us why? Thanks. Pound dollar. Yes, Sukrimba221. Sounds like a code name. You're referring to these ones, I guess? These were planned trades that I added to my trade tracker at some point in the week, maybe even the week prior. And no, I did not take these trades. If I took these trades, I'd be telling you that I took these trades. You have to go on my word on that, or maybe somebody in the community can can pipe up for me. But the reason I didn't take these trades were circumstantial. So as I said before, I'm looking for a strong move in to a level, and I want to take a level that also hasn't really been used recently. So sometimes I'll put things into my trade tracker that I'm waiting on if price was to move away. For example, if price had come down here and I'd got my entry on this pound dollar long position, this for a sell would have been far more interesting. So let's say that on the day, and this is probably where it was, to be fair, price is kind of doing this on pound dollar. It's just consolidating here. If I'd seen this decent move in, I would have probably taken a pullback level to level there on pound dollar. Now, because price has come down here, we've been away from this level a bit longer. So this was only Wednesday the 11th. So literally like the day before. So when price comes back up here, this as a trading opportunity for me on that day is now more of like, I suppose people would call it like a break and retest. So a level gets broken here, right? And then it comes up, retests it, and then goes short again. And so those aren't trades that I take because I don't think they're very high probability. Do they work? Yes, they do. But it's not for me to get in. Like this wasn't a trading opportunity for me. Why? Because it was just a consolidation. Like we were just stuck in this level, right? And just because we broke under it and then came back up into it, it was literally like a couple days before during the week. So I also don't want to get involved in things where price has already been there recently. The best trades are the ones where we've been away from for longer. So if we were to get down here on this pound dollar trade, it would be to go long. I'm enjoying that one a lot more because we haven't been there since the 20th of August. So there's been a bit more time in between. Therefore, the level becomes more significant as time progresses. Why does it become more significant? I actually don't know. But from my data, it just shows that it does. I have some theories about it, like if the level's been on the chart for that long, maybe traders have identified it. There's been enough time for people to know that it's there. I don't know, but I can try and work out why it works or why these things work, or I can just profit from them. And yeah, I just think that the longer price has been away, the more likely it is to work. So this level up here, same kind of thing. It's definitely more interesting to me now. It would have been less interesting to me if we'd come all the way up here and then I'd identified this as a level. I'd be less inclined to take it. So there is discretion with the trading approach that I take. Also timing. As I said, I don't really want to be getting into the trade unless everything looks right for me. A strong move into the level and price overextended. This was a 90 pip move in, so it was decent. I think the reason, I'm just trying to think, so I remember price coming into this. A lot of the time, price action puts me off. And I think this one in particular was because we got fairly close to the level, but my time, it was midnight. And so when price breached this level, I definitely didn't want to be taking anything at this point because the day was done. And I knew if price was going to come up here and ping off the level during Asian session, which I thought would be pretty unlikely. But if it did, it wouldn't be one that I would capture because I'd be off the charts in bed sleeping. Also at the time, things were going berserk with the dollar index. So if we go back to Thursday, 5 p.m., for example, Thursday, 5 p.m., you can see that the dollar was just dropping. And so I think, and I'll have to double check on this one, but I'm pretty sure that the dollar had just broken this low and there wasn't another level for me to take until down here. So I don't trade the dollar index, right? But as I mentioned before, I use it as a confluence. So this is the 4-hour level that I was waiting on next. And because we were up here on Thursday and we just breached this low, there was pretty much no stopping the dollar weakness until we came down here. So with that being said, am I going to get into a pound dollar short knowing that the dollar is still weakening? No, I'm not. So that was the reasoning for not entering those trades. Time of day, dollar. It's not so much the time of day, to be honest. Like if I saw the dollar index hitting a level, I probably would have entertained it. But at the same time, price hadn't been away for long enough for me to think that this was going to be good. So hopefully that answers your question. Yeah, it was a good question, to be fair. So thank you for that. Did I cover all my trades? I think I did. Yeah, so 1, 2, 3, 4, 5, 6 trades in the week. That's how we went. That's how we do it. There were plenty of other trades as well. I know tons of people in the community took some really nice opportunities. Pound CAD was one that I know some people got into and took profits. Again, this is one that was really good for taking profits at the first area of potential struggle. So first area of potential struggle, you can't deny this wick here. That one just there. So if you were to get into this pound CAD trade, you can't be holding for this wick down here. There's going to be a struggle when price gets to here. So as price comes in, you need to ask yourself, is this trade something that's interesting enough for me to take? Do I want to just take 20 pips off of this trade, or is there not a big enough opportunity for me? And if there's not a big enough opportunity for you because of this kind of horrible price action to the left, then just pass on it. That's the other thing. Like, there's going to be plenty more trades, and there's no shortage of opportunities from the market. I often get everything happen at once when it's been an incredibly slow day, like this Wednesday, right? There was some stuff in the morning, but Euro Swiss, so it was a really slow trade. What else do they have? The Aussie Yen, that was kind of a morning trade as well. Again, the better trade was Dollar Yen. And then a really subdued day. I was literally just riding the runner on Euro Swiss up to the highs. And then all of a sudden in the afternoon, just everything went mad. And I had like another 2 or 3 trades that day. But had I not been on the charts, not on the charts, but had I not prepared Wednesday morning for what came on Wednesday, I wouldn't have had the permission to take those trades. And so I would have just had 2 trades this week, which would have also been fine. If I'd have come on this and said, guys, 2 trades this week, I might actually be on time with the with the live stream. I'm aware we're already at the hour, but that's just how it is sometimes. And you have to be okay with that as a trader. You don't need to take trades that you don't think are high probability. You just don't. That is part of trading. And that will also improve your edge and improve your profitability over the long time. So, Sukrimba221, thanks for explaining. You are welcome. That's what we're here to do. If there's any questions people have, you are free to ask me. I'm an open book. Transparency is the key here. Just trying to help you guys out. Any struggling traders that have tried lots of things. The hell was that? Tried lots of things. Things weren't working. Like, sometimes all you need to do is bring it back to basics, simplify, and learn how to track your trades and journal. Weekly reviews of your trades, like what I'm doing here. Like, this is only part of the day. Like I say, I do these breakdowns because I would do them anyway. Yes, I would do them anyway, but I also do my own analysis and reviews of the trades that I missed this week, just to see if there's anything that I can learn from that. Those are the things that will develop you as a trader and make you better over the long run. Not a different strategy, not a new mentor, not another YouTube video, right? I realize the irony that we're watching this on YouTube, okay? But at the same time, I'm not a YouTuber. I'm doing maybe one day I will be, and then I'll be cast the same shadows that I cast on other YouTuber gurus. But hopefully with a long line of successful traders behind me who have taken the same approach and all reached a level of funding. I wish I could share all of the results and the things that are inside Leveled Effects, especially in the paid group. The paid group is just, everybody tells me that it is ridiculous value. I know, but the goal is not for me to sell you a $5,000 course, even though I could potentially do that. I want to see if other people are able to do what I do, because I think it is so simple. It's just removing all those issues and problems that you have from learning other strategies, getting burnt by the market. That's another huge one. You have a lot of fear around taking trades. You're greedy when you should be fearful. You're fearful when you should be greedy. Like this is the same cycles that just repeat themselves over and over and over again. And it is a tough one because at the end of the day, we are human and we're not robots. I think we trade better than robots, but at the same time, we need to be aware of some of the things that we do and that we're the self-sabotage that we're capable of, and be tracking it, because when you're in an emotional state on the charts and you haven't yet managed to separate your planning from your execution, what will happen to you is you will get emotional. Things will feel intense in the moment of taking a trade. And the problem with that is we're releasing, getting all scientifical now, but it's not scientifical, right? That's a word. What happens is these stress hormones get released and dumped into your bloodstream, and you become pretty much half as intelligent as you usually would be. So if you're already pretty stupid, you become half of that. And so that is not a good time for you to be making decisions and thinking about what would be a good thing for you to do right now in the market. No, you should have already planned that ahead of time. And so again, why I think a lot of these other strategies that operate on the lower time frames, I just think they're a little bit too intensive for beginner traders. Do they work? Obviously, because there are successful traders that trade that way. Maybe they're more profitable than me. Maybe they've been doing it more experienced, whatever. I don't care. Like, you shouldn't care either, because as a trader, it's you versus you. Which, it's corny to say, but that is essentially how it is. And you need to just, work on improving yourself each week rather than looking at what other people are doing, how much money they're making. Maybe they have over $1 million in funding and you have 1,000 euros in your account or something like that, right? You're not going to make the same money that a trader that's been doing this for 10 years has over $1 million in capital that they're trading. You need patience, but trading is one of the things that is the fastest growth you will experience in terms of financial reward. The problem is everybody wants it on day one. If you learn the skill of trading, that is all you need in order to get and acquire capital. The capital will find you. If you show an investor a trade history that would look, similar to mine, or any trader that can show that they're following a process and that they've been profitable consistently week on week, they will give you the capital because they need to place it and get a return on it, because we have this thing called inflation, right? So investors always look for a return on their money. And if you've got the skill to do that, the money will find you. And on that note, I will have a quick look at the economic calendar and then wrap this up, because I know I'm over time, but I just love rambling on about trading. And hopefully you guys enjoy it too. And I'm not just talking to myself, even if I am. It's therapeutic. I enjoy it. I'm trying to load this bloody economic calendar. Is it only me lagging? If there's another problem with my camera, I apologize. Long term, well, I was always an iPhone guy. And then I moved to Android and it was amazing. I loved it. But I've always used Apple as well. And so I bought an iPhone just so I could use it as a camera. I don't know if there's logic in that or not. It seemed logical to me at the time, with all the Apple fanboys telling me, you need to get the iPhone, it's great, just pair it with your Mac, it's continuity mode or some shit. But I have a lot of problems with it. It cuts out my stream, it freezes. I don't know. My Wi-Fi and internet is the fastest you can imagine. Anyway, Monday, September the 23rd, what have we got coming? We've got, actually, so Sunday to Monday. All right, so we got, I thought that looked a bit weird. We're going to be going 15th to the 21st, jumping ahead of the gun. Monday is going to be subdued. So we've not got much coming on Monday, so expect a very slow day. Tuesday, and on that note, slow day on Monday. Intraday key levels will probably work quite well. Why will they work well? Because price probably won't move all that much, right? So if price isn't moving that much, you don't necessarily need to wait for price to be extremely overextended. But again, it's slightly more advanced to know and be aware of market conditions, but when you are, you're able to capitalize on more opportunities because of it. Tuesday, we've got CAD, Consumer Price Index. Beautiful. That should be some nice opportunities. Maybe EuroCAD wants to come out and play again and milk that puppy for the last 2 weeks. So, yeah, got excited there. Retail sales on the US dollar on Tuesday. So US dollar and CAD on Tuesday. Both data releases at the same time. Usually the dollar becomes more overpowering and CAD gets ignored, but I'm pretty sure we'll see some stuff on CAD off the back of that. Just look at the CAD positioning on dollar CAD at the moment. So we got this on Tuesday. I think we're going to see CAD weakness. Why do I think that? Well, actually, could go either way. He says, hey, sign up for my signal service. I'll tell you that you've got a 50-50 chance of being right. Is price going to go up or down today? Well, it could do either. So, use that information wisely. I'm, of course, joking for those of you that don't understand my sense of humor. But believe it or not, a lot of people on Twitter actually like saying things like that. They'd say something like, yep, so we've got CAD coming out, CAD news, a CPI, so it could go up or down. And also then we've got US dollar retail sales. So be aware of price moving up or down. So, trade safe. Wednesday, we've got CPI on the pound as well. It should be a good week for volatility and getting some decent moves. So just be very patient on Monday. No need to be running into any trades. There was weeks that went by where I had absolutely no trades on a Monday at all. So I see you guys laughing at that. It's because it's true. I know it's true. And then we've got the Fed interest rate decision on Wednesday. So that'll be a biggie. See if the Fed cut interest rates by another 25 base points, most likely. That's what consensus is. So we'll see if that happens. Highly doubt they're going to keep it the same. And I highly doubt they're going to cut it to 5. So it would probably be as expected. But even so, look at the US dollar positioning as we arrive on Wednesday and just see where we're positioned. Are we near any levels? Check your dollar majors, pound dollar, New Zealand dollar, pound, euro, Aussie, New Zealand dollar. Check it all and see if we're all at levels. If we are, there might be some good trading opportunities there. We've got interest rate projections, first, second, third, current, and longer. Should be interesting, all at the same time. And FOMC. So Wednesday afternoon or Wednesday evening for me is going to be mega. So just be aware of getting into anything that looks pretty average. Take only the strongest setups. Thursday, overnight, we've got New Zealand dollar GDP. So be aware of that. Wednesday, and I say be aware of it. What I mean, just to make this tangible and not just, airy-fairy, price could go up and it could go down. Like, yes, dickhead, of course it can. When I say be aware, I literally just mean like if you are looking at a trading opportunity on the New Zealand dollar leading into Wednesday evening, make sure it's a really good one and price has moved in a strong way, allowing you to get a decent pullback before the data gets released. The data may work in your favor, it may not. So when I say be aware, it's just a case of like, don't take the trade on pound New Zealand or euro New Zealand or even New Zealand dollar on Wednesday thinking this is great. And then you see price kind of like hovering. It doesn't want to pull back. Know ahead of time that you've got New Zealand dollar GDP happening on the Thursday, because knowing that, you'll be able to bring that into your trading and go, you know what, I'm going to pass on this this level because I know we've got some stuff overnight and actually I just prefer to have a decent night's sleep. Will there be more opportunities in the market this week? Hell yeah, there will be. So you don't need to be getting into absolutely everything that doesn't suit you, right? We've got unemployment rate on the Aussie dollar as well. So it could be a mad one for Aussie New Zealand dollar pairs, we'll see. But that's Wednesday night, even though I'm looking at Thursday. Just remember, Wednesday. And then we've got asset purchase facility, Bank of England stuff coming out 2 p.m. on the Thursday. It is looking like a decent week, to be fair. Monetary policy report for Vote rate unchanged. MPC vote rate hike. MPC vote rate cut. Bank of England minutes from the interest rate decision. So this is the all eyes on the interest rate decision, really, from the Bank of England. Consensus is nothing is going to change. So if we do get a surprising cut there, expect a lot of pound weakness to come through. So be aware of it. But you know what I mean. Like, it's coming. So make sure that you're either in and out of any pound trades. And if there are levels nearby, pending orders, don't make them too close. Know that the level could be smashed and size up in terms of risk accordingly. Friday, we got the Bank of Japan interest rate decision. So that's overnight. So that could be interesting. Then a press conference. Then we've got retail sales on the pound. And then we've got a speech from the Bank of Canada. And that's it. So Friday, I'd expect a fairly quiet-ish afternoon. Maybe some movement on yen pairs from the overnight interest rate decision. What I get people to do in the community is go back and look at the previous Bank of Japan interest rate decisions. Look at the date, look at the time. Pull up the Japanese stock market, pull up the yen pairs, look at that date, look at that time, see what happened, write it down, learn from it. It's not that I want you to be able to predict what's happening in the market. No, I just want you to learn what type of news events move the markets. And by doing this, you'll be able to use what I'm talking about now to your advantage. So there's always patterns. Like, you will know if you have better trading days when there's more data being released than if there are days when there's no data being released. You can then use that in your trading and be like, there's no data today, no trading. It sounds simple, but guys, this is what makes the difference between profitable and unprofitable traders, like knowing this stuff. So you should be aware. There's not one successful trader that I know that doesn't know about major high impact news events that are happening on the economic calendar. Like, it's just something you need to know. So there's no excuses for being like, oh, I didn't know, it caught me off by surprise. Like, it's right here. I've just been through it. So we know. And every morning, take a look at it, remind yourself, check the next day, see if there's anything you need to be aware of in the afternoon. So it stops you getting into stuff like on when we've got the Bank of Japan interest rate decision, which was Friday morning happening. So am I going to get into yen trades late on a Thursday afternoon? No, I'm not. Why would I do that? Right? So that's what I'm talking about. Anyway, on that note, I realized I haven't been sharing my screen that whole time, but I did the commentary anyway. So, bear with me, guys. This is what I've been looking at. But if you want to go through it yourself, it's fxstreet.com/economic calendar. Still learning the ropes as a YouTuber. You have to bear with me. I do my best. If you want my best stuff, it's in Leveled FX, which is on school.com/Leveled FX. You can go there. You can join for free. You can learn my full approach. And it's all there. Nothing to buy unless you want to. But yeah, I'd much rather you go through my stuff, see if what I talk about is total shite or if it's actually genuine and helpful. And if you are like all the people in the paid group and you do find it genuine and helpful, then maybe you want me to help you fast track your results, in which case you can join the paid group, which is incredibly reasonably priced. I shouldn't even be doing it for that price, but I do anyway, because I know it will pay off in the long run. And why not have a good, solid community of like-minded people that approach the markets the same way I do, where we can all bounce off ideas to each other and take profits from the market and help other people. Sounds corny, but that's it. So anyway, guys, on that note, I am going to wrap up the live because it's gone way over. I apologize. Hopefully it was valuable. If it was, please give this video a like, a thumbs up, subscribe. I think that's what you say. Subscribe to the channel, because I do these every week, and I also will be putting more content on my YouTube channel when I feel like I am YouTube worthy. But yeah, anyway, have a good rest of your Sunday and see you on the next one. Cheers, guys.